All right, so what we're gonna be looking at right now is what I call, I guess I call it charting anatomy, right? So it's essentially the idea on how you're supposed to be looking at the charts just from an overall general perspective, okay? So obviously what you're looking at is just a whole bunch of different lines. You see a lot of different colors. You see, red and green. You see these red lines, right? So we're going to talk a little bit about what everything means and how you should be looking at this, right? Because for the most part, looking at this initially without really too much of an understanding of what you're seeing, it looks confusing, right? But everything on this chart has a meaning, and you're going to want to know these things so that you can make the correct decisions when you get into the market, okay? So here's what we're looking at here, and this is how you should look at your charts on a day-to-day perspective, right? We're looking at the 4-hour chart here, okay? And so we see two lines, right? We see some lines going up and down, sideways, whatever, okay? We see this orange line and we see this blue line, okay? This orange line is what is the 50 exponential moving average, okay? So this is the average of what the price should be on an average of 50 days, okay? And then we have the 9 EMA, which is 9 days, right? So we have 50 days and we have 9 days. Obviously, as you can see, the blue line is following the candles closer than the orange one is, right? Right? The blue one, which is the 9 EMA, and then the orange one, which is the 50 EMA. The 9 is following the price closer, okay? So that's something very important to note, right? And then we have our 50 EMA, which I like to view it as, if you understand football terminology, you understand like the 50-yard line, the halfway mark, right? Nobody really has possession yet, right? You have your offense and your defense, right? So in the stock market, I would like to more so call it your buyers and your sellers, right? So this is essentially your halfway point, usually on a day-to-day basis, basing it on who is currently in charge of the trend, okay? Who is currently in charge of the trend? Now, it's very important to note that, because here's what we see. When we zoom out, right? Who's in charge of the trend? Anytime we get to the 50 EMA, right? The 50 days exponential moving average, what happens to the candlesticks? Do they go up or down? They go up, right? So who's in charge right now? If we're above the 50 buyers, right? So what that would mean is anytime we were to touch this orange line, we should expect what? A positive reaction or a negative one? A positive. Why? Because we're going upwards. We're trending upwards. We're staying above the 50 exponential moving average, right? Well, what happens when we get below the 50 exponential moving average? What happens? What's the interaction when we see us trending below the this orange line? What's happening? Are we having a positive reaction with the market or negative? Negative, right? So what are we seeing? We're seeing it move down. Okay? This is important information. This allows you to have half of your thinking already situated. Because if you're saying, if we're continuing to trend upwards, that means to tell me that anytime we have candles moving above this orange line, then I should always be looking to do what? Calls. Because we're talking about call. When you call, what do? You call up. So when you purchase a call, you're betting that the market is doing what? Up, right? When you're putting something, what are you doing? You're putting something down. So that's why you would buy puts if we're going down, because you're putting something down. You're calling people up and you're putting something down. That's how you decide where you're going, right? Now, again, if we're deciding to follow a trend, all we're looking at saying is, what am I trying to say? So as we're following the trend, right, we're saying that as we break through and cross below this orange line, that means we're having a bias of purchasing puts, right? Because we're going down, right? That's the very bare minimum basic level idea of how you should view your 50 exponential moving average, okay? For the most part, you're looking at the historical data. What's the last thing this person showed me? The last thing this person showed me is anytime we got to the 50 exponential moving average, there was a positive interaction. Every time I called this person, they had something positive to tell me. That's the story that's being told based on the trend, right? That's why you would call up. So, okay, we haven't spoken in a while, right? This consolidation is we haven't spoken in a while, right? By the time they call you, right, spirits get lifted again. So we're going continuously up. Now, how do we identify a trend change? Usually when we see this cross, when we see this 9, we see this blue crossing this orange. Do you guys see that? Once we crossed, right? Once our price action being closer to the 9 crossed below the 50, that's when we started seeing a negative interaction. Okay, so once it crossed, this is when something happens bad in a relationship. Okay, this is when your best friend betrayed you. Okay, now now when that person calls you, what are you doing? You're putting what? The phone what? Down. We're going down, 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 down. Okay, that's why I never pick up your call. Okay, so that's what we're talking about here. Does that make sense? This is how we're identifying what we're supposed to be looking when we're looking at the markets, right? So now, looking at this now, right, based on the basic bare minimum level of understanding of what you're looking at on this chart, right? Now you have more confidence as to what you should do whenever whenever we have a candle touch this orange line, correct? This doesn't look as confusing as much if we're talking about from a decision-making standpoint, right? If we're right here and we have this blue line crossed below this orange line, what should we be doing? We should be purchasing what? Puts. Why?
It crossed, so it's going down.
That's what a trend reversal would be, when it crosses below and we have our price action, which is our 9 EMA, below our orange line, our 50 EMA. Does that make sense?
Yes, but then are you looking for the 9 EMA to approach back where it's going to then cross the 50 again and then go back up?
So we're always going to be looking at the higher trends when we're talking about what's actually occurring in the market, right? So when we're talking about a trend reversal, those trend reversals are usually where we see crosses, right? So when we see a cross down here, right? Mm-hmm. The 9 EMA crossed above the 50 and then we started to trend upwards, right? So that's how we know when we have a trend reversal or a positive interaction now, right? This is a climate change. Something happened here, right? A buyer essentially stepped into the market and said, all right, the price is low enough. You guys have taken it low enough. We're going to take it up. So here's my favorite part about the markets, right? This is repeatable. What do I mean? If you go towards, this chart is showing us, this is June, okay? This is June of 2023 all the way over here. What is consistent? What's consistent is anytime we're trending, we hold the trend. Anytime we reverse, we hold it until we break the trend again, right? So history shows us, at least from January 26th, right, all the way till, if you can follow my cursor, right, this is probably August 2nd, okay? Yeah, August 2nd, because it shows up here, right? So if we're over here before we cross, so from June 26th to August 2nd, anytime on the larger time frame, 4-hour time frame, anytime we touched or broke below a little bit the 50 EMA, which is this orange line, what happened? We had what type of reaction? Positive or negative? Positive. Anytime we touched it, right? And when I say touch it, I mean, so so crossing would look more so like a larger distance between these two, right? So if we see something like this is not really that much of a large distance between the two, right? So we would more so see that more as like a bounce, more so than a cross. A cross is like more violent, right? Sellers are being violent here, okay? Meaning they're pushing the price lower. So that's where we have more of a reversal, right? Exactly, right? So that's more of how you should look at it. If you could see more space between your blue line and your orange line, that's how you know that it's a confirmed reversal, right? But if we're still like, if the EMAs are kind of touching, right? See how close they are here? Usually that's an indication of a bounce to the upside or a retest to reverse to the downside. But that's why patience is so important, because we're not making a decision here, right? We're not making the decision down here. We're waiting to get confirmation on the next candle, right? So even though we're below here, we wait on the next candle and say, all right, if you're supposed to continue trending lower, I should see more lower, right? Like, and the inverse is true as well. If we're supposed to be going up, I should see more upside. Like, if you're a good person, I should see more good in you, right? Am I resonating with you guys? So from that perspective, that allows us to decide what we're going to make a choice to do. We saw yesterday there was a lot of consolidating action where we're kind of squeezing, and buyers and sellers are kind of they're kind of in an imbalance, right? What we would do is we would simply wait for this type of interaction, because what ends up happening is, let's even just say we don't get into this candle. Now that we know we're above the 50 and we're continuing to trend above it, now what we look for is a bounce on the 50. And that's where you get more of a positive interaction, right? So what happens here is, the story being told is, if you can follow me here, right? We're trending a little bit lower, right? But we then reach a pivotal point where we are no longer going lower. So then there's a strong buyer that pushes the market up. This buyer says, oh, this is a great price. This is you going online shopping for a Birkin bag saying, oh, this is a legit bag for $500, right? Granted, a Birkin bag will never be $500, okay? For anybody watching this video, okay? Don't get fooled, okay? So based on that, right? This is you saying, okay, this is a really cheap price. I'm gonna buy as many as possible. Why? Because there's gonna be so many people interested in this bag by the time this price stabilizes, right? So, okay, cars are cheap right now, but eventually they're gonna be more expensive. This house is cheap right now. The market's low right now, right? It's a seller's market right now. It's a buyer's market right now, right? So let's buy up all the houses, right? Then we get to a point where the market just starts raging, right? We get into a situation where, for whatever reason, real estate starts booming and it becomes a seller's market. Now it's like, if I'm a buyer over here, I can sell up here, right? And take my money. Now, here's a pivotal point. Even with us deciding, okay, this is because there's some people that are pretty, risk averse, right? So we say, okay, that looks good and all, right? This nice green candle looks good and all, but I need more convincing to know that I'm making the right decision to buy this house at this low price. What you tell yourself is, okay, let me see what the interaction is by the time we get back to a level where we are testing what the trend is. When we test what the trend is, we're testing what's going to happen at what level. What's this EMA? What number is that? The 50. Okay, because it's what? It's the halfway point. It allows us to say, are the buyers in control or are the sellers in control? Okay, once we test that level, right? The houses were cheap down here, right? So then we get back to the 50 and say, okay, are the houses going to get cheap as they were before? And the market says no. So what do you decide to then do? That would be a great decision for you to buy calls right there again, right? Because now we know that this is where our support is. This is the lowest the houses are going to be now, at least for the foreseeable future. That's how you think about your decision when you're getting into market at that time, right? Now you get into the market there, and then you buy calls because you know it's going up. See, a lot of people, they would see red here and get confused, but because you have that indicator there, or because you understand the story of what's potentially occurring at that point in time, that allows you to make a very confident decision when you're getting into the market, right? Because you're saying, well, even though it's red, it has to become even much more red underneath this 50 EMA for me to believe that it's going to be trending back to the downside. And because it doesn't, that allows you to say, okay, I can stay here, right? Does that make sense? It's like almost like, let's say you're on vacation and, in a different country or whatever. And then people tell you all the time, it's a bad country to be in. It's a lot of robberies. It's a lot of whole stuff. And so you're really scared, right? It's like, should I stay here? Should I not? After the first day, You get down here and it's like the wind is still blowing, like the beach still looks nice, like it's probably not that dangerous, right? So that's probably your idea of saying, well, I'm just going to stay here, right? You're not leaving now because you didn't see somebody rob anybody and take the market down. You didn't see somebody get shot, right? Like, that sounds really vulgar for a recording. I'm sorry, guys. That's really bad. But you didn't see any negative, you didn't see anything bad occur to get you to the point where you say, I'm getting out of here. I'm changing hotels. I'm getting out of this position. Is that resonating? Right? You didn't see anything different. So you say, okay, well, I'm going to stay here, right? Then what happens because of your patience with staying there? Well, they end up bringing you free food for your entire visit, right? Because they've heard about these reviews online that they've been in such a bad hotel. You gave them, the courtesy of at least trying it out. And it looks like it's a decent thing. So then they end up just giving you the whole world. And that's what this next candle is. Okay? You take it to the upside, you take your gains, you get out of there. The whole idea is you want to have an understanding on what you're looking at in the market on a day-to-day basis, on a moment-by-moment basis, so that while you're watching the next thing occur, you're continuing to understand the story of what's happening in the market. Because somebody's in control at all times. Somebody's in control, right? And even with consolidation, someone's in control. Think about it. While it's consolidating, there's someone on the other end of the consolidation that knows where price is supposed to go. So they can decide to manipulate it. That's when you can start seeing stuff like this happen, right? Where you can have, where you can start to have highs like this, and then the sellers could say, well, hold on. I know we're not going to be approaching, we're not going to get above this level here, right? So even while we're consolidating, the sellers are still in control. Because as we continue going up, what did the sellers do? Pull it back down. We go up, they pull it back down. And then finally they say, you know what, enough is enough. We're going to show our hand. And then they give the knockout punch. Boom, bring it to the downside. That's when everybody's yelling and screaming. And yelling and screaming can be two things. You can either be yelling and screaming for good or yelling and screaming for bad. Somebody like me, I'm yelling and screaming for what? Good. For good. Why? Because I'm seeing us approach this ceiling. This is you at your job, at your 9 to 5. You're trying to tell your boss how much value you have, and they're looking at you like, listen, sir, listen, ma'am. Okay? Here's the deal. You do great work at this job. I love what you're doing, but because of our expenses, your income is capped at this salary. Okay? This is what the ceiling looks like. Okay? So then that's how price starts to trend downwards. If I don't see a promotion where I'm getting a new, I'm getting a new level up, then I'm out of there. Okay, I'm going down, I'm going to the downside, right? Like I'm switching my position, I'm switching my bias. My bias here is this is a good job, I graduated from Howard University. I got a great job out of school, right? And then all of a sudden it's like, y'all not trying to really pay me what I'm really worth for real. I bust my tail here. Okay, well, I guess I'm not that high on, working here anymore. So I'm going to do what? Switch my bias, switch positions. So what do? I go to the downside now. Does all that make sense? Okay, that's how you want to make sure that you're viewing the market. Whenever you're seeing this resistance like this, don't get confused. Right? There's a reason as to why that's occurring. And what you want to do is you position yourself to say, well, something's not adding up here. I think there's some sellers here. Even if you take a seller position, if it goes against you, what do? You get out of the trade. Why? Because you have an understanding on why it's against you. Right? Like, the only reason why I stay in this trade is if it continues to go down. If it doesn't go down, I just simply get out because I know what? That just meant that, okay, we touched the 90 EMA and then it starts to shoot back up again. We're not going to be trending down after it shoots past the resistance level. Okay? Does that make sense? We just need evidence of otherwise. That's how I view trading. I need evidence of otherwise. If I'm in here, I'm grabbing calls, right? If I believe that my calls aren't going to be good, it's because I need to see otherwise. So I'm grabbing calls here. And for me to get out of my calls, I need to do what? See otherwise. to get out the trade. To get out of this trade, I need to see otherwise. When I'm in,
Prove you wrong.
I need it to prove me wrong. You have to prove me wrong. My analysis says, as a master trader, I get into calls here and go upwards because we stay stuck at this level. So if we don't stay stuck at this level, what am I doing? Right? That's the question I'm asking myself. Every time I enter a trade, I ask myself, what do I need to see to get out of this trade? That's how I view my trading. I don't look at it as, I want to make so much money. I don't look at it that way. I'm trading the process. The process says we're supposed to go up right here. The process says we're supposed to go up right here. If we don't go up right here, then I'm not staying in that trade as a buyer to go to the upside.
But are you getting in and waiting for the next candle to get in?
It's really going to be up to how confident you are in the trade you're in, right? Because for me, I'm confident getting in here, knowing that I just need to see with my two eyes that we're going low. If I don't see that on this next candle, I'm stone-faced and I'm looking at the market, and as it's going up, I'm watching my profits go up, and I'm taking my money and then googleflights.com. You know what I'm saying? So, but if I'm over here, what I'm saying is, if I'm up here, what I'm saying is, okay, because we're stuck at this, like I would literally be looking here, right? And I'm like, we're stuck at this level. I'm stuck here. We are potentially going to be going down because if we're supposed to go up, we would have been up already. That's in my mind. That's how I'm thinking, right? So I would essentially be getting into puts anytime we touch the top of this area. I'm grabbing puts because I'm believing I'm going down, right? Now, how does my bias change if I'm supposed to get out of those puts so I don't lose money? What has to happen? It has to do what? It has to break through. This candle has to do what? It has to be a green candle and break to the upside. Because if it's not, what am I doing? I'm grabbing more puts or potentially holding whatever I have until I see a slither. Like once this candle formed and I started seeing green, what am I doing? I'm getting the heck out of that trade, right? I'm getting out of that trade because then I want to protect my profits, okay? Now, if you hold and it comes up here, you've already lost all your profits, so I wouldn't even hold through all this, right? But then guess what? Let's say I sell here and then this candle appears again and we get up here. What am I thinking? I'm grabbing more puts. Why?
Because that level's already been tested.
This has already been tested. It's already been tested.
And it's a green candle.
And it's a green candle. Thank you, Alec. Think about that. Think about it. It's like you going back to that job and begging again, and they still telling you the same answer. We not giving you that money. You come back to the job, you try to ask them for the same salary. They say, look, we won't even give you the same salary you asked for last time because you already left. You look desperate. Now we're gonna give you less. You see that little bit? You see that little bit of room there? We call that what? A lower high. When I see a lower high after a rejection, you know it's going down. A lower high after rejection, what's that saying? That's saying they're pushing the ceiling lower. Like the price was up here, but now we're down here now. Like you can't even get up to this level now. That makes me even more excited because what ends up happening then is that there's even more of a move to the downside. Why? Because these buyers here, they're now disappeared. They say to themselves, oh, they don't even respect me when I get up here. So we're not even going to end here this time. We're going to go even much lower than that. That's the story being told at that point in time, right? That's usually what happens when you see a lower high, right? That's when you see it. That's when you see us like cascade to the downside or even cascade to the upside, even the inverse, right? What happens here? We have what? What's this candle called? A lower what? A lower high again, because we had a green candle here that was a high. Then we try to push up again. I'm going back to that job again. All right, this is the third time. Y'all better give me the salary I want. Then they say, well, listen, now we're in inflation. So we can't even give you the second time what we could have gave you. Now we got to give you even less than that. So what does that do? I run out of there so even much more faster. I get even more furious. These are sellers taking the price where? Down. Because we have what? A lower high. A high that was lower than the previous one. This high is lower than this high, is it not? That's why we could bring it even much further down, okay? But how do we know that there's a trend reversal? Now we start to see a trend reversal after we break below the 50 EMA, this orange line. Once it broke through it this time, we continued. See, the difference between this high and this high, right, is that this high broke this one. So what would this high be compared to this one? This would be a higher high. So when we have a higher high, that's usually a trend reversal after a lower high. Does that make sense? So now we found a new job over here and they respect us on this end. Down here is like, you're in your prayer closet. What am I going to do? Like, I got to make a change. You might change your skill set over here. You might become an options trader over here. Over here, you were doing nursing. You become an options trader down here. Like, I got to figure it out. You meet Josh and Wasi down here. Okay. And then your life changes. You have a trend reversal, right? You have a trend reversal. Now, you might see a few losses during the beginning of your journey, but then by the time you end up experiencing those and learning from them, okay, you have your trend reversal. You start going to the upside, okay? Then we now have this new high. This is us. Now we're a master trader over here, okay? We have a new high now. We're no longer begging at this point. Hello, am I talking? Cool. So we continue going upwards, right? The trend reversal occurred. So now we hold on to our bias. Now we're saying, okay, the buyers are in charge of the market, okay, and so on and so forth. That's how you view the market, guys. What's happening? We have a high here, right? Then we have a dump. What would this candle be considered? A lower high. A lower high. What happens when we have a lower high? It goes down. How much down? Even further down. We've seen that over here somewhere. We had a lower high and then we flushed even further down from this low, right? A lower high up here. What happened? It flushed. It flushed, absolutely. Okay? A lower high is considered a retest. That's how I view a lower high. It's a retest. A retest of what? A retest of if we're going to actually break the highs. But if we don't break the highs, ladies and gentlemen, where are we going? We're going down. When you understand the story, it allows you to be confident about the decisions you're making. Because you're understanding what's happening, not because you're seeing red and green, but because you're telling yourself a story of what's happening in real time, right? That's how you become what I call like almost a fortune teller. It's like I can predict the future at that point, right? Buyers pushed it up again, okay? What would this be called? A lower high. What happened after the lower high? This is when you start seeing things occur and it feels like you're in a zone. Like, it feels like you're in a zone. This is where you get very unemotional. Extremely unemotional. This is when you don't even look at money. You just look at the process because the process is what's going to bring the money, right? Because the money's not going to bring the process. There's always a different dollar amount for any trade you're in. Think about that. Any trade I'm in, there's always a different dollar amount, but sometimes there's usually the same setup. So why would I follow the profit? I'm always going to follow the process because the process is what's going to bring the money. I understand that the process of a lower high is to bring me money from puts. That's the purpose of a lower high for me, is to bring me money from the puts that I buy. Okay, this is the downside. Obviously, we're obviously now in the market we're trending upwards, right? And the same thing is happening, but just in inverse. The same thing is happening, but just in inverse. When we see ourselves up, down, up, down, up, down, but still staying in a steady incline, it's the same story being happened. It's called a retest, right? It's a retest. We're retesting the levels of where we feel, right? It's almost like skipping a rock down a pond or something, right? It's like we're always testing these levels, but we're still staying on the 50 exponential moving average. So we're still holding onto our bias. But guys, who knows that if we have a break below the 50 exponential moving average, if we continue having lower highs on that, that means we're going to be going down, okay? We have higher highs, which means we're going up, right? Now, look at this here. We have a low down here, right? And then we have the market trying to push lower again down here. What did we call this low compared to this one? A higher low. What is a higher low indicating? It's going up. So if a lower high indicates we're going where? Down. Then a higher low indicates we're going where? So what's the key pivotal word there when we talk about lower high and higher low? What's the key word there as far as the direction we're going? Is it the first word or the second word?
The first.
The first word. Why? Lower high means we're going where? Low. Higher low means we're going where? Up. Can we say it again? Lower high means where we're going. Where are we going? Low. Higher low means where are we going? Up. Okay, we have a higher low here. This is a low, but it's higher than the previous low. Right? This is a low, but it's higher than the previous low. This is also a low, but it's higher than what? The previous low. Sometimes, and that's one thing I want to make sure I make sure I say right now. Sometimes your low may not even be a red candle. Because as we can see here, the buyers said, we don't want to stay down here. These are buyers pushing it all the way back up at the close of this candle. Right? We reached this low and we still end up pushing up. That's even more of an indication that we were potentially still trending to the upside. Right? So you don't have to have a higher low on a red candle. Sometimes it's a green candle. Okay? This is also a higher low, right? This low is higher than this low down here. And I'm going to draw the trend line so we could see it, because obviously you guys could see the orange line be essentially a trend line, right? And sometimes that's even good enough just to show you like what trend is happening. I'm going to go ahead and draw the trend line so you guys can see it. And what I'm going to do is I'm going to attempt to touch every low on this chart as I draw it up, right? Okay. And I'm going to make this a little different. I'm going to distinct this a little bit. All right. So you guys see that line, right? Mm-hmm. Every time we get near that line, it seemed as though we were having a positive interaction in the market. And sometimes that's all you need to know. Last time I went to that restaurant, the food was banging. Right? Mm-hmm. Right? What happened last time you went to the restaurant this time? You went there that first time, you were disappointed. What happened the second time you went? It was even worse. Are you going back to that restaurant? You're not going back to that restaurant. Okay? So you're going downside. All right? I found that it's easier to watch things happen in the market when you could have an understanding of even the story behind what's occurring, right? When you can conceptualize it in a real tangible way, more so than just like the market's going up, the market's going down, right? It's like if you understand the story, then it's like you can make decisions based on the story, right? Because if somebody tells you a story, right, and you're like, what would you do in that situation? You would have a outcome, right? So for instance, if somebody told you a situation where they had a friend that betrayed them, right? Or they had, or they were at a job that they didn't like, right? And it's like, I want to decide what am I going to do based on this decision, right? They give you the story. They tell you, all right, well, I was at this job and here's the story of the job, right? I was at the job and, I'm doing great work at this job. I'm traveling across the world. I'm doing whatever I want to do. But for whatever reason, I'm not getting the salary I want, right? I'm not getting the fulfillment I'm looking for, right? I'm not like things are just not going the way I want them to go, especially at that time in my life, right? You hear the story, so then you tell yourself, okay, so then I'm telling you like, all right, well, I have a meeting with my boss today. So then you're encouraging me and saying, okay, you're going to do great. You're going to get it promoted, right? And every single time I go to this same meeting with my boss. My boss has this same weird excuse as to why he can't pay me more, right? So you heard the story. Now, what advice are you going to give me to do based on that story? Do something about it. Something has to do what? Change. Right? So as you're watching the market and you're hearing the story in your own mind, that's what you're telling yourself. And when you get to that ceiling, what are you saying? We've been going up, but I'm still stuck at this level. So something has to what? Change. And when you realize that, that's when you decide, okay, I'm going to do one thing or the other, right? That allows you to decide I'm going to go ahead and buy calls or buy puts, okay? So, to me, that's the most fundamental way you can look into the market, making sure you have your trend lines, because there's always a trend. There's always a trend, okay? There's always a trend. This is the larger time frame, but you can obviously also see these trends happen in real time on the closer intervals as well, right? This is a 5-minute chart. Look at this. I already have an example for y'all right here. We got hung up over here. This was during the live call on Friday, right? And I was like, why are we stuck here? Something's going on. I highlighted this box, right? This is an area where they just can't seem to get above it. What happened after we kept trying to agitate that level? What happens? We go down. How many minutes is this? 5-minute chart, okay? So if you're making these decisions, that's the 4-hour chart we were watching before. This is the 5-minute chart you're going to be using on a day-to-day basis. So let's assume that this is what you're watching right here, right? This is as much as you can see right now, right? You're seeing us stay stuck at that level. What are you telling yourself right there? There's a potential rejection. Now, what's the story of us going the other direction? What would have had to happen? We would have to do what? Break through where? Above this box, right? We'd have to break through above this box for us to know that we're continuing to go upwards, right? So then we have more candles occur. We have a green candle here. Then what's our bias now? What is this called? A lower high. A lower high. This is when I start thinking about the Bahamas. Okay? A lower high. All right? Now, I showed you guys the end already, okay? But it's fine. We end up excuse me. We end up touching this high again. What happens? Rejection. We go down.
I'm ready for Monday.
Right? So, I mean, do you guys have any questions on that? How like what would be the level of difficulty with just the information there? Like, do you guys feel like, all right, let's do this. How about this? We're back here again. We started here. How do we feel now that we're looking at this? Perfectly fine. Now, if not perfectly fine, do we at least feel better about what we're seeing? It's clear now. It's like if you were to sit down just on your own and just start telling stories on your own, you could probably do that, right? Based off of the information that we have so far. Correct? Like if I just point somewhere and I'm like, based off of this point, where do you think we should go? Most of us should be able to say we should be going this direction, right? So let's do that. We have this point here, right? And then this point here. What would this point be considered? A lower high. So where should we be going? Down. Okay. It's just as simple as that. All right, we have these 2 points here. 1, 2. What's this point called?
Higher low.
A higher low. So where are we going? We're going up. You got it. Before you guys, at the beginning of this video, you may not have had that understanding. As a result of watching this video and watching this recording, or even just being here in person, even having just that simple understanding could allow you to make a lot of money in the options market, right? A lot of money, tons of money, just having just that understanding alone, right? Key things you need your trend lines. So for me, Josh gave you guys his pre-market strategy, right? As far as how he gets into the market, right? What it looks like is making sure you already have your 9 EMA, your 50 EMA, right? You're drawing your potential price levels. Where are we seeing our prices always having interactions, right? And then we're simply just looking at the chart saying, what's the story being told at that given point in time, right? What's actually occurring, right? Because for the most part, as a trader, most retail traders they look at the chart and they don't really know what's happening. That's why only 1% of traders usually are successful, right? And the problem with that is if you don't have an understanding of the chart, then you're not being informed on the decisions that you're making. You're just guessing, right? Now, can guessing be made consistent? You cannot guess consistently, okay? This is why I don't gamble, because it's not consistent. I can't live my life being a gambler, okay? And this is why the stock market is not gambling, because these are all predictable outcomes, right? These are all predictable outcomes. Whenever we had a lower high, we crossed lower. We didn't even cross just to the same low. Most of the time we were crossing even lower than the previous low when we had a lower high, right? Here's our lower high. This low is lower than this one. Here's our lower high. This low is lower than this one, okay? That's what's happening. They're usually retests is when we have these waves in the market, right? So I hope that helped you guys out. Sound good?
Yeah, definitely.
Cool? Excellent. Well, thanks for having me.